Light FM and Nancy Wilson and Hart there. Good morning. I am Morning Dave. Appreciate you being here. We're at 8:40 now, 20 before 9.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
Please do that. And we check in with our advisor, who is Philip Statler from Statler Financial Services in downtown Sebring each morning at this time. Philip's on the phone. Good morning, sir. How are you today?
Good morning, Dave. Doing well. It looks like some good things happening on Wall Street, at least yesterday. Though, the indexes seem to be still bumping their heads against the all-time highs.
Yeah, I was going to say, even after the dip that we took last week, we were still only a couple of percentage points off of record highs. But Friday, I was guessing yesterday morning, as much as anything, that some index, some measurement, something ended up tripping a couple of computer switches, because on Friday we went crazy as far as stocks in general were concerned, and big recovery on the software stocks that suffered so much last week, and we didn't lose that ground yesterday. Dow, it wasn't as spectacular as Friday, but Dow was up by 20, the Standard & Poor's was up by 22.5, and NASDAQ up by another 208. It looks to me like we got a little bit of our legs back under us for at least a couple of days, doesn't it?
It looks that way, and the question is always how much further does it have to go, right? We've seen a nice little bounce back, and that's good, which is, we're going to have the ups and downs. I mean, that's just part of a market, and, we're going to have good days, we're going to have bad days, we're going to have good weeks and bad weeks, and it looks like at least this week starting out pretty good.
Absolutely. And you and I always have to do the big gray cloud routine. Keep in mind, this is a very, very long-running bull market. It doesn't take much in order to turn it into a bear, or at the very least give us a substantial correction. And one never knows when we have one of those nosedives like we took for the first 4 days of last week, whether or not this is the beginning of a correction. Hopefully not a bear, but we are overdue for that as well. So, the recovery felt really good, but the question becomes, is another shoe going to drop later on this week? And, well, we kind of started out with the retail sales report. The Feds issued the retail sales number for the month of December, or January rather, and we were expecting a little bit of an increase in buying, but we didn't get it. Dead flat for the month, and that kind of disappointed folks, I gather.
It did, because it's December, right? December, Christmas. You would have thought we'd have seen an increase in retail sales. Didn't happen, though. Again, both retail sales and retail sales minus auto were flat. Expectations were for them to be up 0.4 and 0.3 respectively going forward. So not exactly what we wanted to see there, Dave. And again, these are December numbers.
That's right, December.
The other number that came out, you probably didn't see this one because it just hit my ticker. Import prices for December were expected to be flat. They ticked up 0.1%. So again, that's not really good news either. So,
and that's going to be a little bit of a harbinger of what we might expect on Friday when we get the consumer price index number. I think that comes out on Friday, doesn't it?
It does. The CPI comes out on Friday.
Absolutely, and we get our jobs report for the month of January out tomorrow instead of last Friday, owing to that little government shutdown. I can't help but wonder if the reaction might be a little muted to the retail sales number, just on the grounds that it was a short Christmas shopping season falling in December, simply on the grounds that Thanksgiving ran so late this year. Compared to the end of the month, it ends up kind of giving a truncated season, and that might explain why we overachieved during the month of November.
It could very well be the case, Dave. But we can just wait now for January's numbers. Who knows when we'll get those? And hopefully,
are you counting on another shutdown or something?
Well, they're pretty slow getting the numbers back up to us. So hopefully we'll get those shortly.
It's absolutely true. 4 days shutdown. They probably won't be able to get us January's numbers until the end of April or something. It's a rather busy week in terms of government data dump reports. I mentioned the CPI coming out on Friday, and I mentioned earlier that tomorrow we're going to get Friday's numbers. And given the numbers that you're giving right now and what we saw last week from the JOLTS report and the other early indicators like ADP, I got to be sitting on pins and needles to see what the government says the official unemployment rate is for last month now.
Well, I can give you the expectation because the expectation is out there, I guess, because they're so late in coming. The expectation is that we're going to see 55,000 jobs, and we're going to end up in an unemployment rate of 4.4 again. That's the expectation.
I was going to say that's a repeat from the prior month, which wouldn't be bad news. Seeing degradation would definitely not be what we're looking for. So anyway, We're starting out the morning right now. My fear and greed index is back approaching greed again. The amateur investors are relatively optimistic. We're looking at records, and you got to find some place to go to get your money out of crypto because Bitcoin sunk down and touched 60,000 for a while yesterday. I'm sitting there saying, holy crud, that's a 50% drop from its peak.
Yeah, well, I didn't see it go down that low yesterday, Dave. Now, last week on Friday, it got down below 60. But over the weekend, it bounced back up to 70, and it's off at 70,000 now. It's down about 2.5% this morning as we get ready to trade. But it was painful on Friday, definitely.
Absolutely. Other things going on that we're looking at down the line, the conversation continues to go on as far as Bitcoin, obviously. Also, whether or not the software firms that got hammered so badly last week are going to survive. Let's see. White House says Hassett, the White House economic advisor, says he expects smaller numbers than the market expects. Isn't that nice to hear? We're talking down the market out of the White House.
In an election year, that's probably not good.
Yeah, I was going to say, I'm trying to figure out the motive for that one. And, trivia out there, if you're traveling and you travel Air Canada, you like going to Cuba, they've suspended flights to Cuba because Cuba's running out of jet fuel because they can't smuggle anything in from Venezuela. It's not exactly a major macro number, but it does hit me somewhere down the line. Earnings season continues, and we got some household names coming out last night and today. How did Coca-Cola do anyway?
Coca-Cola was kind of a mixed bag, Dave. They beat on earnings by 2 cents a share, came in at 58 cents. However, they missed on revenue, and their guidance, wasn't exactly what everybody wanted it to be, and so that has them trading down, getting close to 4%, 3.7% right now.
Ouch. Did they say which divisions it was giving them the most difficulty in?
It was, let's see if I can see. Organic growth they don't expect it to go up as much as expected. Water, sports drinks, and coffee and tea division outperformed the rest of its portfolio. I didn't see soda in there.
Sell water up. I'm glad they can sell water up there. That's good to hear. What other indications have we got?
All right, so we've got a couple of DuPont reported. They beat by 3 cents a share. Revenue was basically in line with expectations. They did report an upbeat full-year guidance, both on earnings and revenue. They're trading up a little over 2.5% right now. S&P Global, they getting hammered this morning. They missed on earnings by 3 cents a share, came in at $4.30. And it looks to me like their adjusted earnings range for this next year is well below analyst expectations. So they're getting hammered pretty big today, down 16.7%.
Ouch. Now, S&P Global, they do what?
Yeah, I knew you was going to ask me that, and I wasn't going to have a good answer for you yet. So, I'm thinking they are. I can tell you real quick. They're the ones that have the global ratings,
Okay.
commodities insights, global mobility. The S&P Dow Jones indices are theirs.
Okay, that was what I was wondering. Which part of the Standard & Poor's crowd S&P Global was? Okay.
Yeah. So that's that was a quick draw for you there. So
Gotcha.
CVS reported they kind of increased, it looks like, their revenue guidance. Must not be, oh no, I'm sorry. They're underestimated their guidance, which has them falling this morning. Not as bad as it was. It was down 2% earlier this morning. Now it's only down 0.75%. Let's talk about some, fast stocks, right? Ferrari reported. They beat on earnings and revenue. I will tell you, I follow that stock for fun. They've gotten kind of beat up here lately, so it's kind of nice to see that they are bouncing back a little bit. They're up 7.6% this morning. Before we get going, I'm trying to see if there's any other household names. Upworks, Upworks is where you can hire somebody, freelancers, that kind of stuff.
That's right. I've seen their ads on cable TV. Basically, you hire freelancers to work remote for you.
Exactly, the project by project type of thing. Their active clients were down in 2025, which not helping them any this morning. Their current quarter guidance was less than expected. They missed their estimates on EPS. A lot of problems for Upworks this morning, and they are trading down 22.2%.
When you hit the trifecta of missing everything, expect to lose 20%, right?
Yeah, exactly. So I think that's really about all I have for you this morning, Dave.
All righty. Yeah, I would stop on a 20% loser, too, if I were you. Let's see. Yesterday was basically a good, modest amount of green on all the major indices. 45 minutes before we open this morning, what are we looking at?
Well, let me refresh. All right. So it's not bad, Dave. The Dow is down $23 right now. S&P 500 is down a buck 90, less than a 5/100ths. The Nasdaq's actually up a little bit, $5. So it's going to be an interesting open. On the other side of the coin, commodity side, silver slipping another 0.75%, but better than it was on Friday. It's $81.63 an ounce. Gold's down a little less than 0.1% right now, still over 5,000. Crude oil up 0.25%, $64.53 a barrel right now, Dave.
Gosh, we're going to have to take over another oil-producing country. I'm getting tired of seeing that number go up. Looking across the ponds, the Asian Rim, generally happy with us from yesterday. The mainland Chinese markets were up fractionally, but both in green ink at the close at 6 a.m. Europe, on the other hand, is a little, let's call it, circumspect this morning. I got a mixture of small ups and small downs. It's almost flat. The average European index down by less than 0.1% halfway through their day, so I'm going to call that one flat. Getting my retirement together takes your eyes to help me get my dreams turned into plans. Philip, how do we make that happen?
They can give us a call at 863-382-0037, where we'll spend 30 minutes on the phone with them, making sure that they've got everything put together. And if there's any gaps or holes or things that we need to help with, we're obviously glad to help out in any way we can. And then catch the Statler Financial Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And at newstalk730am.com. Sir, I appreciate it. I'll see you tomorrow morning. Fair enough?
All right, buddy. Have a great day.
Take care. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope your week is off to a great start. Join us again tomorrow as we talk about what's happening in the marketplace. Until then, have a great day.